Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Report, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Let's take a look at some of the stocks on the move. Today, I'm Paul Sweeney alongside John Tucker, and we're joined by Bloomberg's Lisa Mateo. Lisa, what are you looking at?
All right, we want to start with Taiwan Semiconductor Manufacturing, ticker TSM. Their shares have been up as much as 2%. So here's the thing, right? It posted better than expected, 39% jump in profit, hiked its projection for 2025 revenue growth for the second time this year, raised its forecast for capital spending, which is key. So what it's basically doing, it's reinforcing hopes on how long the global AI boom spending is going to stick around. It's also showing a little bit more proof how chip makers stand to be among the biggest winners from that boom. And that boom, and we've talked about it, expected to push past $1 trillion in coming years. That's a lot of money. Now, when we look at chip equipment stock, so for example, you look at ASML, which gets 17% of its revenue from TSMC, their ADRs are up nearly 2%. And then in the US, if you watch TSMC suppliers, for example, like Applied Materials, KLA, Lam Research, their shares are all up about 1%. So some good news for Taiwan Semiconductor Manufacturing. Where the bad news is, that is computer hardware storage company Hewlett Packard Enterprise's ticker HPE. Their shares have been down as much as 9%. What they did, they issued a full year forecast for profit and cash flow, fell short of estimates. And you know HPE, right? It's one of the largest makers of computing equipment. So it's betting on networking as this major piece of its future expansion, how it wants to expand. If you remember back in July, it said that it was going to buy Juniper Networks for about $13 billion. But HPE, they have tighter margins due to building these servers with those expensive AI chips, and they have made the machines a little bit less profitable. And that's the problem there.
The stock was up 17% year to date, so it's giving back a good chunk of that today.
Give me the history. When was it that they split apart, HPE and HPE?
4 or 5 years
2015,
ago,
right?
Yeah, something like that, yeah. And HPE and HPQ are the two ones. But that's just, HP is one of the founding members of Silicon Valley. That's how I think about it. Oracle, Intel, those kinds of names.
I always get those tickers mixed up. I'm like HP, HPQ,
yeah,
HPE.
I do too. Anurag, what do I need to do here?
Exactly. And we'll stick with we'll go to the software company Salesforce. This one is ticker CRM. Their shares have been up more than about 5%. Forecast revenue growth is going to accelerate to double digits in the coming year. So that was a big news. And that kind of eased investor concerns about the pace of the business. What investors they were worried about is that customers were spending their budgets on AI tools from startup companies instead of like traditional vendors like Salesforce. So this kind of reassured that for them. They expect $60 billion in annual revenue by fiscal year ending in January 2030. That excludes any contribution from the planned acquisition they have from Informatica. But the company is also going to buy back an additional $7 billion of shares in the next 6 months. So it's really the good news that the company needed. I mean, the stock has taken a hit. It dropped about 29% through Wednesday's close.
And it had been such a classic winner. Or a classic software story, it's just always going to work. But then people said AI. Is AI going to replace a lot of the functionality of some of the Salesforce software? That was, I think, the concern I heard from some of the tech folks.
Gee, I sense a common theme running through all these stocks this morning, Lisa.
Well, except for the last one, United Airlines. There you go. I'll sneak that one in there.
We just heard from the CEO
we did.
a little
Scott
earlier.
Kirby, yes. Remember, he was just talking about saying that they're getting more corporate clients. He was saying international travel is coming back. He was telling Lisa Bromwitz. So it's ticker UAL. But the problem is that their shares have kind of taken a turn. They've slipped down more than 1% because analysts at Bloomberg Intelligence are saying the airline's results, they're showing signs of saturation, even in the premium seats that they say more people are starting to buy. So that's the difference there. But yeah, they've been trying to focus on that more expensive travel experience.
Well, I just booked Aruba, so
is it premium?
For January. No, we did the Mezza, the middle thing, the premium economy.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.